look at exercise 17. Okay, so exercise 17, we're going to be looking at, it'll come up. Classifying transactions. So we're going to look at journal entries and figure out where they go in our statement of cash flows. Okay, so this is going to be some different practice on when we're going to look at a transaction from a journal entry perspective and figure out what kind of transaction it is. So in A, we've got a debit to cash and a credit to common stock. So think about what that transaction means. Okay. This is telling us that we sold some common stock, right? Now, common stock is an equity item, so that means that this would go in financing. So, if you look over here, so operating, we're looking for any kind of, we need net income, non-cash expenses, and current assets, and current liabilities. Okay, so that's what we're looking for here for operating. Investing, think of long-term assets. Financing, we're looking for long-term liabilities and equity items. Okay. So then this second transaction, we've got a debit to treasury stock and a credit to cash. Well, it's treasury stock dealing with equity. So again, it's financing. Okay, let's look at C. C, we have a debit to cash and a credit to sales revenue. Well, this is part of our calculation of net income. So remember, net income equals revenues less expenses. So revenue is part of net income, which goes in operating. So this would be an operating transaction. Now what about D? It says we debit land and credit cash. So here we're purchasing land, which is a long-term asset. So that's an investing transaction. Now, E, we've got debit to depreciation expense and a credit to accumulated depreciation. And there's no cash here, right? Look at all those transactions we were just looking at. There was a cash item. Here it's not cash, but it's an expense, right? Expense is part of the calculation of net income. And we know depreciation is a non-cash expense, so that's in operating, right? Look at F, we've got a debit to dividends payable and a credit to cash. Well, dividends payable is part of equity, right? We're paying dividends out to our stockholders, so that's going to be a financing. So you could add that on here. Dividends, okay. Now let's look at the next one. So we've got G is debit land and credit cash. Again, we had one like that already. That was investing because land is a long-term asset. And H, we have a debit to cash and a credit to equipment. So here we're not purchasing equipment, but we're selling it, and it's still going to be investing. I, we have bond payable is a debit and a credit to cash. So here we're purchasing a bonds payable. So a bond would be a way we could finance something. So we issued a bond and we're paying it back. Okay, we're not buying a bond investment, or it would just be long-term investment bond. This is a payable we had. So we actually sold a bond to somebody. So this is a way they finance. All right, so J, we have debit building and credit note payable. So there's no cash involved here, right? No revenue, no expenses. So since we're getting an asset in exchange for a liability, that's what we call, remember, non-cash investing financing. Okay. The last one is K, and we've got a loss on disposal of equipment, and we've got accumulated depreciation equipment and we're getting rid of the equipment. So this is one of those transactions where we're disposing of equipment, okay? Since we're just disposing of it, we're not selling it, we're not getting any proceeds, none of this transaction is going to go to investing. But that loss on disposal, remember, we're going to adjust net income for that. That's a non-cash item. So that's going to be part of operating. All right? So if you have any questions on that, please post your questions to the discussion board.